What does the debt situation in Greece mean to self-directed investors like you and me? Should it change the way you invest here at home? I'm Bryan Ellis. I'll tell you the answer right now in episode number 99.
You're listening to Self-Directed Investor Radio, America's only podcast exclusively for affluent, self-directed investors, where each day of the week you receive innovative investment strategy and deadly accurate market analysis that's untainted by Wall Street and unblemished by government propaganda, all in 7 minutes or less. Coming to you now from iTunes, Stitcher, and SDIRadio.com, here's your host, Bryan Ellis.
Hello, my friends. Today's topic is a little bit wonky, and I promise you right now I won't bury you with too many facts and figures or archaic economic terms. I'd really rather spend this time telling you about the great results our clients are getting, but I'll skip that for now. Folks, there's a real crisis going on in Greece. The bottom line is this. The government has been spending money like it's going out of style, and the growth of the economy simply hasn't kept pace to justify it. It's a huge, huge problem, and that's putting it lightly. The government debt problem in Greece is so bad that it's literally altering the face of geopolitics as we speak. Greece is the perfect picture of what happens when government gets too big and tries to act more like a nanny state than a political organization. Can you imagine that? I mean, what if the government was willing to pay for everything for citizens, from cell phones to high-speed internet connections? Oh, wait a minute, I'm sorry. That's right here in the United States. Now back to Greece. But just a minute. There's a lesson in the parallel between the debt situations of the United States and Greece. A parallel which is sobering and enlightening if you look closely. So here's the thing about Greece. Their national debt is presently 177% of GDP. So in other words, Greece owes nearly twice as much money as the total amount of every penny they produce every single year. As a result, Greece's debt payments are so high that the other obligations of the government simply cannot be satisfied. Greece is broke. Well, not true. They're far below broke. That country is bankrupt. But here's the thing. While Greece is a whole country, the fact is, in the grand scheme of the entire world, it's not much. Greece makes up only about 1.8% of the Eurozone economy. All of America's exports to Greece amounts to a few thousandths of 1%. So the direct impact won't be felt in America at all, and only a nuisance in the Eurozone. But still, there are two valuable pieces of learning that you and I, as self-directed investors, can garner from the situation. And they are, first, considering America's debt crisis, can something like the Greek debacle happen to America? And secondly, for my listeners in Greece, and yes, we have listeners in Greece, what could they have done to prepare for this crisis, and what should Americans be doing right now who may fear this type of crisis themselves? My friends, I love America. I really do. This is the land of opportunity. It's still the land of opportunity despite the efforts of our political leaders to aggressively chip away at our freedoms. America is no longer the land of greatest opportunity, but we still have every reason to push forward with optimism. Having said that, the financial situation of our country is absolutely terrifying. That's not an opinion, it's a fact. Our debt trajectory is on a very similar path to Greece's. That's not hyperbole. Allow me to share some numbers with you, if I may. Greece's situation is certainly far worse than here in America. As I told you, Greece's national debt is 177% of GDP. That's astounding, absolutely huge. But America is an ugly picture too. Our debt to GDP ratio right now is about 109%. That's far worse than nearly every other developed country in the entire world. What's worse, our debt is increasing at a rate far faster than our economy is growing. Here's the really scary thing. It's the trajectory of the expansion of our debt that's so terrifying. In the roughly 3 minutes since you began listening to this episode of Self-Directed Investor Radio, the U.S. national debt has gone up by about $4 million in the last 3 minutes. In every 3 minutes. Does the gravity of that grab you at all? But the trajectory is the real issue. Something amazing happened back in 2008. That year, America's debt to GDP ratio was about 64%. So that's a lot of debt, but the country as a whole was producing far, far, far more money than the debt we owed. But then something happened. Our national debt skyrocketed and skyrocketed and skyrocketed. And here we are 7 years later, and our national debt has jumped by 68% in the past 6 years. 68%. Can you believe it? Well, how does that compare to Greece? Well, we're better off than them in one way. Back in 2008, when we were at a much more acceptable debt to GDP level, Greece was already at 105%. And since then, their national debt has boomed just like ours. Their national debt increased upwards by, can you believe it, 68%. Exactly the rate at which America's national debt has boomed upwards in the same period of time. And curiously, America is now at the same debt level, a bit worse actually, than Greece was back in 2008 when all of this began. So let's summarize it this way. America's debt is increasing at exactly the same rate as Greece's has over the last 7 years. America's debt level is worse now than Greece's was 7 years ago. I'm making no predictions about what this means, but like everyone else who both has a brain and who is deeply concerned about the country that our children and grandchildren will inherit, I see the writing on the wall, and the story written there is not full of hope. Could what's happening in Greece happen in America? Absolutely. It won't happen the same way, but it absolutely could happen, and something will happen if we keep on this course. The laws of finance cannot be flaunted any more than the law of gravity. Sure, we have wind machines that can keep a person afloat above the ground, but those wind machines rely on power. They rely on an engine. They're not self-sufficient. The laws of gravity are not being denied, just delayed. So too the laws of finance. Those billions of dollars being printed each month by the Fed, well, the inherent worthlessness of those slips of paper absolutely will catch up to us because the debt those fake dollars are creating is very, very real. And the debt we're building in America will haunt us. I just hope it doesn't destroy us. Well, how's that for a cheery tune? I'm sorry, my friends, but it's important to me that you know I'll tell you the truth, even when it's ugly. This is one of those ugly times. So what can we do to hedge against that type of risk? Folks, that's a tough question because at the end of the day, if our economy actually collapses, one has to wonder how strong our system of laws will be to maintain the property rights we hold so dear. Not just real estate, I mean all property. So, with the understanding that all bets are off in the event of an economic cataclysm leading to an anarchical state of affairs in America, I respectfully encourage you to consider the following. Consider deploying a portion of your portfolio in hard assets, things that have real value in and of themselves. Precious metals are a great option. Gold, silver, platinum, etc. I personally don't consider precious metals to be investments, but they are a great way to hedge against the economic uncertainty involved in relying on a currency that has no intrinsic value, such as the good old US dollar. Another great example is real estate. Real estate is worth something, period. Even if the US dollar became worthless, American real estate would still have real value. You can use it. It has worth. It's a store of value. Now, I've got to admit, my friends, I'm concerned, deeply concerned about the state of our economy. My wife and I are making some adjustments to our financial plan in light of what's happening right now. And as a wise, self-directed investor, I recommend you consider doing so as well. My friends, may I have the honor of staying in touch with you via email? We self-directed investors must stick together. Please text the word SDI radio to 33444 to become my personal contact. Again, just text the word SDI radio, like self-directed investor radio, SDI radio, with no spaces or periods, to 33444 to become my contact. I'd really appreciate it. Friends, invest wisely today and live well forever.
Thank you for listening to Self-Directed Investor Radio with Bryan Ellis. Don't miss a single episode. Be sure to subscribe to Self-Directed Investor Radio right now on iTunes, on Stitcher, and at SDIRadio.com. Your feedback is always welcomed via email at feedback@SDIRadio.com. This show is for entertainment purposes only and is not intended as legal or professional advice for your situation. Content is the property of the Self-Directed Investor Society.